Okay, if you want to flick it to me, I'm happy to include it. It'd be great. No, they're over-reported. I mean, they're much more minor. The government's playing them up. They're basically amping it up and, clamping down on people, locking people up, even for just sharing social media stuff. It's pretty disgusting. New government wants to cramp down hard. Here we are, folks. Welcome, welcome. Hope everyone's well this evening. Not too cold. I know it's a bit chilly in parts of Australia at the moment. Let me just put the pre-show runner on there. We'll just keep this up for a moment or two before we meet the 8 p.m. formal start time. Great to have everybody on. Nice to see some of the Adam Stokes fan club in the house tonight. Always welcome, of course. Hopefully we're going to have a really interesting conversation this evening. And just a couple of little discussion points. We've got 3 dogs with us at the moment. The white dog on the end, the beagle. Move my chair so you can see. That's Trixie. So I'm looking after Trixie at the moment. And she's settled in quite well. So I've got 3 dogs now to worry about rather than 2. It's great fun. So that's that one. And of course, here's the studio. Adam is there in the background, plugged in and ready to join us in a second or two. As normal, we've got the screens up there with the multi-view, the chat, controls for the system, and a couple of other screens too. The streaming system is being managed over here on the other computer. And the streamer itself is next door because it's rather noisy. And the good news is we're going to have a really interesting conversation about crypto-related matters and about money and about what's happening to the true value of money and what we can do about it. So it's an important conversation, particularly now with what's going on with regard to interest rates and those sorts of things. So I think we are pretty much ready to go. I'm going to take the pre-show off. I'm going to start the show formally. I'll be back in just a moment. Good evening and welcome to this live stream on the 27th of August 24. Martin North here from Digital Finance Analytics. Great to have you on this evening. We're going to have a really interesting chat about crypto-related issues and the value of money and all those very important concepts. And as always, nice to see some of Adam's supporters and followers coming across and spending some time with us on our channel tonight. There's been a bit of cross-pollination over the years, but of course we do have some people on our channel who are not quite convinced of the crypto story. So as always, there'll be an interesting debate discussion. Keep it nice, of course. Keep it friendly, but happy to have whatever debates go. Just by way of introduction, let me remind you we're not providing specific financial or legal advice. This is a general conversation. We moderate the chat, but feel free to put your questions and comments in. If you'd like to ask a specific question, then use @WhatTheWorld. That'll make sure it gets into my queue. And I've also enabled Super Chat, which means that if you want to get your question top of the list, you can do that. Or indeed, if you'd like to make a contribution to what we do around here, we don't do this for profit. We do this because we think there are some really important conversations to be had. And frankly, at the moment, in the mainstream, a lot of these conversations are not being had. So it needs to be done in alternative media like ourselves. And with that all done, I'm going to bring Adam in. Adam, hello, welcome back.
Hello, Martin. Great to be here.
Great to have you on again. We last had a conversation just at around the time of Bitcoin's halving, and a bit of water's gone under the bridge since then. So I thought it was time to catch up and spend a bit of time just kicking around some of the key concepts. But before we get started, just introduce yourself to those who may not know who you are and what you do.
Well, thank you for having me again. I'm Adam Stokes. I host the Adam Stokes YouTube channel, author of 28 Pro Trader Tips, The Art of Trading, also founder of the Crypto.land. Background, I'm essentially an economist, crypto enthusiast, as well as a long-time, if not lifetime investor. Always keen to learn and explore the other side, and of course, very grateful to be working with Martin, who we met many years ago, Martin, fighting the cash ban. We seem to win that together, along with our alliance of fighters against the injustices of trying to ban the freedom of association. And I think the natural progression from that is moving into the freedom of hard, sound, immutable, open, borderless money, which of course is Bitcoin.
Yes. Funny that. Yeah, no, it's great. And look, we've had some really interesting conversations over the years. And, I tend to come from the mainstream financial world, but I have put my toe into crypto over the years and have been watching it with great interest and believe that the world as we know it in terms of the financial system is relatively broken. And if you want evidence of that, then here's the global debt side. The total global debt, 3.15 trillion plus. It's probably even higher than that. Debt to GDP ratio 333%. This is an unbelievable amount of debt there. And one of the things I think, as I think about this, I come to is we need to understand what the construction of that debt actually is, because of course it's not all the same, right? And I just want to sort of bring this little chart to bear, because this is actually one from Macro Alchemist, which was Exeter's pyramid. And it makes the point that at the bottom, the pointy bit of the pyramid, you've got a relatively small amount of gold, a relatively small amount of paper money, and then above that, you've got government bonds and treasury bills, and then you've got the municipal bonds and securitized debt and the listed stocks, and above that, you've got the non-monetary commodities, private business, real estate, and then you've got derivatives and unfunded government liabilities right at the top. And what we need to understand is that this is a pretty unstable pyramid. And, it's continuing to be pumped up. It's continuing to grow. And so any conversation about crypto needs to be, I think, contextualized by this sort of picture.
Yeah, it's a powerful image, and of course I sent you that other image of looking at where all the money is in the world, and we can see that most of the money is, of course, in the derivatives market. But when we actually, it's a very difficult image that I sent you before to see, because it's all stretched out in a vertical column, if you will. But I think it's very powerful to look at the image if you can bring it up, because what it does show is how all of this money is distributed in proportion to each other. Now, I often refer to the chart of how much money there is in the world and how much opportunity there is for crypto. You had a little slip of the tongue there before. I think you said $3.15 trillion in global debt. More like 315. The US national debt, of course, is 35.2 trillion and climbing very fast. Don't worry, I slip up on my numbers all the time on this channel. Sometimes I get my billions and trillions mixed up, which is funny, because if you think about when we were young whippersnappers, Martin, we never really thought about trillions. If you even speak to young people now, they realize that a millionaire isn't really anything. A millionaire isn't anything because we've inflated away so much purchasing power of the dollars and all fiats around the world. But conversely, noting on the crypto guy here, you can see that over time, you need more dollars to buy a house, but less Bitcoin to buy a house. So what we can ultimately see is that when it comes to Bitcoin, a hard, sound, immutable, scarce money, it's getting more and more purchasing power. So as the world scrambles, both at the retail and institutional level, and now at the national / federal level, you can see that people are moving to try and find somewhere to park their money. Bitcoin isn't just about buying low and selling high. People now have to actively move away from this rapidly inflating money supply of fiat around the world. Now, if you speak to the Peter Schiffs out there, they say, of course, it's going to be gold, and that's where you've got to put your money, because it's a hard money. But ultimately, we do not know the supply of gold, but we do know the supply of the scarcest money in the world, which is in fact Bitcoin. Now, this is quite confronting to a lot of people. I hold gold, I like gold, but I'm making bigger moves in the harder, sounder, fairer, more open, immutable, and neutral money of Bitcoin than I am in gold. So for all of us, we have to say, well, where do we put our money? And many around the world are saying, well, at the moment, I'm just trying to eat. I don't have any expendable cash to put into these markets. I have to just try and survive. And that, in fact, echoes the tragedy of the growing debt and the biggest scam in the world, which is, in fact, fiat, where they just keep printing this money and inflating the crap out of the money supply, reducing our purchasing power, pushing prices through the roof. And of course, it's not just the CPI that we should be watching, it's also the PPI, where we can see that the producer index at both ends of the scale, it is getting so expensive to both produce and to consume. So we need to find an alternative money. I'd say it can't be gold, because how do I use it on the internet? How do I use it even peer-to-peer? I've got to weigh it, check it, and store it, and move it around, and that's very slow and cumbersome. So I need something that's more agile, and that, of course, is the digital space. And many of the gold normies will say, well, I simply write a digital note against Bitcoin, against gold, but of course, then we're back to fiat. We've done this before. And you've got me straight into a rant about gold. Ultimately, if we're going to use gold as a global reserve, we can see it's never really worked in the past. Why would it work in the future, particularly as we now have the digital space? If we use gold as a global reserve, we're in this conundrum of, well, we have to centralize the gold somewhere in a vault. and then write a note against that gold, whether it's digital or physical, and then we're back to where we started again. So we need the properties of gold when it comes to scarcity, immutability, and fungibility, which gold isn't as fungible as Bitcoin or other cryptos. But we need the better properties of a digital asset that we can move around the world with little friction and little interference by centralized bodies. And many people are coming around to this. And that's why I would say, look, it's almost at the point now that it's financially irresponsible not to at least hedge some of your investable money into the fastest growing asset in the history of humanity, which is Bitcoin. It stood the test of time for 15 years. And now the ultimate sign for this very hard sound and powerful money coming around is, of course, presidents are talking about it. So in the olden days, it was like us internet nerds talking about it. Then it was the speculators. Then it was the ETF or the fund managers looking at getting it into an ETF. But when you have presidents and future and present presidents talking about it, either good or bad, it's clearly reached the global stage. And when you can see nations talking about or actually adopting it as part of their reserves, this thing here is here to stay.
Yeah, and just want to come back to that chart because it's a complex chart to try and show, but it is worth, I think, just walking through it, right? Because it shows you, let me just bring it up if I can. Let's put it up here. There you go. Right, so this is actually comparing the world's money and markets. And of course, it's a bit old, it's 2020, right? Each square is worth about 100 billion. And so we start with silver. This is back then. And we had cryptocurrencies, 244 billion. Military spending, a lot more. The US budget deficit back in 2020, even more. The amount of coins and banknotes in circulation is at 6.6 trillion. The Fed's balance sheet was over 7 trillion. Of course, it's gone up since then and it's now coming back down. We have billionaires holding about 8 trillion. It's probably more than that now. The total value of gold then was 10.9 trillion. We had the Fortune 500 with the 495 largest companies by revenue. The New York Stock Exchange, which was 89 trillion. The money supply, the narrow at 35.2, the broad at 95.7. The global debt at 253 trillion. Of course, it's now even more than that, as we saw earlier on. And you can see here that it's actually a lot of government rather than just household debt that's driving it. And so it goes on. And then global real estate is worth 280 trillion. Nothing to sneeze at there, you would argue, including residential, commercial. So residential is the big chunk. Then you've got some commercial, agricultural, and global wealth in North America, sitting on a large amount of it, but 360 trillion, according to Credit Suisse. And then you can see it broken down with Europe, Asia Pacific, and etc. And then the derivatives, well, depends how you measure derivatives, but derivatives is a massive amount. It goes on and on and on and on and on. Maybe 1 quadrillion or something. So it shows you just the relativities, right? And I just want to come out and make one other point about this. With the higher interest rates that we've now got, and with the massive amounts of government debt that's actually being pumped through, the servicing of debt is going to become a more and more of a critical issue. And in fact, this slide here is what I want to show you now. If I can just switch back through to there, go to there. Hang on, wrong one. Yeah, let's go this way. Just want to go back to this slide here. I'll get it there. There we go. So this is the US payments on the debt that they've issued, right? It's now more than 1 trillion in the US. And you've got to ask yourself, where is the payment going to come from to service the debt? And of course, it comes from taxpayers, and it comes from money that can't be directed to other functions. You can't afford a health service now because you've got to pay the debt. And of course, with a lot of money going on the military, massive questions of priorities. But this debt servicing issue is absolutely critical. And another way of looking at this, you mentioned money supply, the M2 in the US You can see there that it's went up from 2020, it's come back down and now going up again. And even the inflation adjusted M2 is still massively high. So the point I want to make is that all of this liquidity that's being created is actually pumping up asset prices and pumping up asset values. That's why real estate's gone up. That's why the stock markets have gone up. But is it real or is it illusory? I guess that's the question.
It's powerful because when you mentioned that the money comes from the taxpayers, it actually, that's only a portion of where it comes from. Because if you think it actually comes from our children who aren't even taxpayers yet, because when they print the money, it dilutes everyone's present holdings and future holdings. Then if you go to the other end of the scale and you think of all the retirees who are no longer by default taxpayers until it comes to a goods and services tax or a VAT tax or a sales tax, it actually dilutes their holdings as well. So it's all being paid for through stealing from people's savings on top of the tax. So as we know, inflation is the invisible and brutal tax. And where it's so insult to injury is probably where they say governments print lots of money because of their spending, not our spending. But then they turn around and say, it was your fault, Martin. It's your fault because of inflation. And you did it, Adam, and you did it, viewers out there, because you went and bought too many loaves of bread. And that new car that you bought, well, of course, that drove up inflation, so it's your fault. So what we're going to do to punish you is we're going to put the interest rates up, taking more money out of your pocket. Equally, we're going to hurt you further because the CPI and PPI is going up. Therefore, things are more expensive and the cost of producing stuff is more expensive. We're going to pretend that it wasn't us and it was you. Meanwhile, government spending still goes through the roof. That money is taken out of the economy and given to those who created the problem in the first place. Their reward for printing too much money is putting the interest rate up, therefore getting more money in return. It's just utterly absurd, and it will fall down. It will ultimately collapse. Now, my prediction, my economic prediction, is the fall down will be war. We can see this through Ray Dalio's work. We can see this through the realities of history. When the debt becomes too much and the fiat becomes so worthless, there is a tipping point. Now, whether that's internal conflict, as we could arguably see within the United States, throughout Western nations, to a point in the United Kingdom that we spoke about off camera, whether it's on the global stage in the Gaza Strip or in the Ukrainian-Russian border, whether it's in Taiwan. There are so many flashpoints at the moment. Now, by themselves, they're all concerning, but when you bring them all together, combined with the debt issue, this is a huge problem that I'm very concerned about. So ultimately, the governments are addicted to this drug, and I emphasize this isn't a left or right of government or my government or your government. It's a global issue. All governments on the left and right and centered globally, no matter where they are, if they have the power to print money and steal everyone's value by diluting everyone's value, by printing the actual funny money, which is fiat, not Bitcoin, it'll come to a tipping point. And of course, the tragedy of when they print more and more of this money, it's those at the very top who get the best benefit of it. And then you have this trickle-down economics effect where by the time the money gets to us peons at the bottom, it's lost so much of its purchasing power. But equally, whatever we want to buy has gone up so much in a nominal value. So we get the worst of both worlds. The real value of the money that we eventually get through trickle-down economics has lost so much of its purchasing power. And the nominal value of anything that we want to buy, like a house as an example, has gone so far up that the delta between the purchasing power of what we hold and the price of the capital asset of which we hope to acquire is so far apart that it almost becomes impossible. Now, where it gets even scarier is that we can see that governments are in fact looking at putting in a tax for unrealized gains, which is a catastrophic thought for anyone in the free world. That you purchase a house as an example, and that house nominally goes up over the year, for an example, $100,000. Your house has now got up $100,000 in value. You haven't sold that house. And if it's an investment property, as an example, on paper, they say, well, you've just made $100,000, even though you haven't liquidated the asset. And they keep toying with this idea in multiple nations that they're going to tax the people for unrealized gains. Now, hopefully this never eventuates, but if it were to, we're in a world of hurt. It's going to get even worse. And it kind of links to, the Great Reset, where they say, own nothing and you'll be happy. Well, of course, someone has to own all of these assets. If I'm not owning it and you're not owning it, someone has to own it. And if it's the state that's owning it, well, that's shifting towards communism, isn't it? It's moving to a socialist state where we can see over history that has never worked. So it's all, I mean, you're a philosopher, and you can see how philosophy and money can integrate with human behavior. That is, we know that fiat always fails, and yet we move back to it. We know that socialism or communism always leads to mass starvation, violence, death in slavery camps and so forth. And yet there's even talk within the West of, by some, moving to a socialist state. So where we look for the savior, the antithesis to it all, we have to find a hard money. The layer one solution to everything that we do in life, the foundation, whether we like it or not, is a fair, sound, hard, open, neutral money. And we have it. We have it. It's called Bitcoin. But obviously those who want to print money, those who want to control our thoughts, our actions, how we move our value throughout the world, they want to maintain this control. And I understand why. But now we're moving to the point that nation states are saying, well, hang on a second. If I'm cut out of the SWIFT network, or I'm suddenly called an enemy of the state, and all the citizens within my nations are suddenly called oligarchs, and a centralized party or body, whoever they may be, can cut me out of the SWIFT network, therefore the global network, and seize my bank accounts, and cut me out of doing business through the world, well, I have to protect myself from that. So no matter where we are in the world, we have to protect ourselves from either inflation, being cut out of the global village, or having our bank accounts seized. And no matter which way you look at this, the answer is in fact Bitcoin. So whether you're a retail investor, an institutional investor, or a national party per se who's trying to maintain control over your own economy and your own people and your own security, Bitcoin offers us so many different solutions.
Well, we'll come on to Bitcoin in a bit more detail, because I want to touch on specifically the ETF story, because I think that's an important part of the evolution of Bitcoin. But just before I do that, 2 points. The first is, everyone talks about house price inflation. What they should be actually talking about is the dollar devaluing, right? It's not that house prices have gone up. It's just that the dollar that you had in your pocket 5 years ago is now worth a hell of a lot less than what it is today. And that's because of the additional money that's been pumped into the systems. And of course, the journey through COVID and beyond, where we had ultra low interest rates and we had very high levels of government support. In other words, they created money and then put it around the economy. Those were highly inflationary actions. And I'm surprised, and well, no, I'm not surprised really, but it's true, that even Jerome Powell, when he was talking the other day at Jackson Hole, didn't really actually concede that central banks were part of the problem in terms of creating the massive amount of inflation and therefore the devaluation of currencies around the world. The truth is that the latest round of inflation has predominantly been created by all of this money printing and all of the ultra low interest rates. But it's also interesting to note that the current growth in world debt is despite central banks actually moving into quantitative tightening. And in fact, this chart here shows the point. The ECB, the Bank of Japan, and the Fed are all actually reducing their balance sheets. So what's happening at the moment is a lot of the money that's being created is actually being issued, like, for example, in the US, but from the Treasury there. They're putting a lot of money into the economy, pulling in the opposite direction to the central banks. And so it does come back ultimately to the action of governments. And then I want to underscore the other point you made about the fact that not only is it current taxpayers, but it's actually a mortgage into the future for the future generations. And that, for me, is the most scary part of all this, that we're actually building an unsustainable economic story that means at some point it's going to come unglued. It's a question of if and when and how, but at some point it will. But in the meantime, the net effect of all of these bad policies over the last 20, 30, 40 years is to suck out the value of money, is to suck out the capacity to invest in things which are really important for the economic future of society and countries. And frankly, it also, I think, completely disconnects the interests of government with the interests of its people. And so for all those reasons, the current system that we've got is not fit for purpose.
Yeah, and just to expand on the housing one, what's interesting is many people get excited when the value of their house goes up. Now, of course, we should make a separation, noting that this isn't tax advice, but many will be saying, well, hang on, Adam, it doesn't matter if I own that house and I sell the house, I don't pay a capital gains because it's mine. Well, okay, but when you sell a house, you can't suddenly, if you buy a house for 500,000, you sell it for $1 million, you're not suddenly going to be able to buy 2 houses because you've doubled your money. Of course, all the stock around you has gone up in parallel. But that aside, what's even more concerning, you own a house. Let's say you're not an investor. You're just a battler. You've bought a house, or you've just inherited a house through your family's generational effort to purchase that house. And that house continues to go up in value. Well, guess what? Your rates go up in value. Now, even if you're an owner-occupier, you're going to have to pay more rates because the land value of your house has gone up. So you might be owning a house that's worth, I don't know, as an example, $8,000 a year in rates, but it keeps going up. So suddenly you're paying $20,000 a year in rates, $30,000, $40,000, $50,000, $60,000 a year in rates. You haven't sold the house. The house hasn't gone up in value when it comes to, I've now got 6 bedrooms instead of 3. I haven't now got a bigger backyard than what I had before. It's not suddenly a better house, but I have to pay more rates. Now, more concerningly, wages, as we know, the wage index is not keeping up with CPI, and CPI in itself is a lie. I say that publicly regularly. The CPI rates are a blatant lie and scam because they're constantly adjusting and tweaking and changing what's going into the CPI basket and lying to the people about what the true rate of inflation really is. So that suppresses what is actually happening around us, but we can feel it. We know what's happening with how much money we have today compared to what we had in the past. I was speaking to an elderly gentleman just today, story time with Uncle Adam. He's 60 and he's working very hard. And he said, and his kids have grown up, they've left home. He doesn't buy crazy cars. He's just got an old Toyota that he's been driving for years. He owns his home and he's got no mortgage. And he said to me, I've never done it so tough in my life. And that's a really powerful situation where he's working, he's got no debts, his kids have left home, he doesn't do anything crazy with going on holidays, and he's struggling to live. And he's 60. This is the golden years where he should be really beginning to wind down and enjoy the fruits of his labor. But it's in fact the complete opposite. And the reason is not because he went out and bought another car, not because he went on crazy holidays, but simply because his purchasing power is eroding. Concurrently, his taxes proportionately for everything that he spends around him, rates as an example, are going so high that this poor Aussie battler who's done the right thing his entire life is struggling to make ends meet. And that is just going to get worse and worse until we pivot from the Ponzi scheme of fiat and move to the hard, fair, sound money of something similar to or actually being Bitcoin.
And it's, I think, just worth reflecting because of my surveys. I survey households both in the UK now and in Australia, and I see that same story. That's a lot of people who thought they were setting themselves up for, a reasonably comfortable journey in later life are actually struggling. But also a lot of younger people are as well, because of course the cost of living is still very high. And whilst inflation may be coming down a little bit, prices are still higher than they were 2, 3, 4, 5, 6, 7 years ago. And so people are actually chasing effectively bigger bills. And while incomes may be rising a little bit, actually, if you look at real incomes, certainly in the UK, they're up slightly. But in Australia, in real terms, they're still below where they were a decade ago. And what that basically means is that people are going backwards. And that it's a direct consequences of what we've been talking about with regard to the ability to be able to actually create more and more debt in the system, to blow asset prices up, to put more debt on the balance sheets of the country, and of course large corporates and everybody else as well. And this leveraged future is one that only has one way out, because you cannot repay the amount of debt that's in the system, right? So you'll never repay it. So we're in this irreversible acceleration. We're up and to the right. So the question is, what happens, right? And I guess there's a couple of scenarios. You mentioned, conflict and war. And of course, conflict and war can sometimes reset economics quite substantially. If you look back over the previous couple of centuries, there were times when it did that. So that's one rather uncomfortable way out. The second uncomfortable way out is to replace the financial system we got with another one, but who's going to determine what that is and who's going to dictate top down? Of course, the World Economic Forum and those other organizations who want to have a technocratic view of the future where it's effectively a digital currency, a central bank digital currency in particular, one that may be connected across different countries, but guess what? It's controlled. It can be basically manipulated. And quite a few people talk about central banks wanting central bank digital currency because it gives them more control of their monetary policies. So that these additional tools, I'm not comfortable with that story. So then if those two stories are, the uncomfortable ones, then, well, does the Bitcoin story stack up as an alternative approach? And in this transitionary period that we're in, I suppose the question is, how do you live with one foot in the old camp and one foot in the new camp? And that takes us quite interestingly into the recent development of the spot Bitcoin ETF. And I want to spend a bit of time specifically exploring that tonight, because I think it's important people understand what it is and what it isn't. Because I remember when this first came up, a lot of people said, well, this is going to actually completely change the game for Bitcoin. Interestingly, there have been some changes, and this slide actually just gives you a quick summary. So on the 10th of January this year, the SEC approved 11 new spot Bitcoins. The exchange-traded funds are a type of security that tracks the underlying performance of a collection of assets. So a spot Bitcoin ETF is an exchange-traded fund. Very importantly, by holding an equivalent amount of Bitcoin to back every share in the ETF, the fund is actually backed by Bitcoin itself. So that was effectively a new departure, unlike the futures Bitcoin, which frankly was a complex derivative and really nobody really understood what it was worth. So what's your take on this ETF development? And there was a question earlier on in the chat that said, but hang on a moment, aren't banks now in control therefore because they're running the Bitcoin strategy?
Yeah, so ultimately the architecture of ETFs doesn't change. Sorry, the architecture of Bitcoin is not changed when ETFs are adopted. That is spot-backed ETFs. So let's just park the future ETFs, as you said. They're not real. It's basically a gambling house. And now you might say, well, so is Bitcoin. Well, everything's a gamble if you want to go into an investing space. The entire stock exchange is a gamble. But we can mitigate the risk and calculate our risk-to-reward ratios by actually seeing what's happening around us. So futures, we had spot-backed, correction, we had Bitcoin futures for some time. They weren't the real thing that we were looking for. We were looking for spot-backed ETFs. And we've had them in different nations. We've had them for a while. But the big turning point, what was happening in the center of gravity for the financial markets, which of course is the United States of America. Ultimately, what's happened is Bitcoin has just met another milestone. It has been legitimized even further. So for anyone out there, and I understand there's many viewers out there who say this Bitcoin thing's a scam. Well, in the first instance, if it were a scam, why on earth would taxation officers around the world tax it? Scams aren't taxed. They are reported to the police and taken down, and the cartel is ruined and all the money goes straight to the government. When it comes to Bitcoin, it is a legitimate financial product that is legitimized firstly through tax, secondly through 15 years of history, but now thirdly through spot-backed ETFs endorsed by governments globally. So we keep evolving in the Bitcoin timeline where, well, we're going to have a 51% hack. Well, we've moved past that. It's going to be double spent. Well, we've moved past that. Oh, well, I can make my own Bitcoin. Yeah, you can, and we've moved past that, and many people have done it. And now we've got the spot-backed ETFs where we had them around the world, but now we've got them in the center of gravity for the financial markets, the United States. So it's a good thing. Now, many of the Bitcoin, I'll go the other way now. So a lot of the Bitcoin maxis, if you will, or the purists say, no, it's a bad thing because how dare these centralized institutions get involved in our money? And I call them up very quickly and I say, no, Bitcoin is blind. Bitcoin is neutral. That is a core principle of Bitcoin. It is neutral. No one can discriminate against anyone using Bitcoin, whether you're the poorest person in the world with an internet connection or a multi-trillion-dollar organization who controls a lot of the money supply at the moment. It doesn't matter. Bitcoin is blind. But the fundamentals of Bitcoin, there is a supply of 21 million. There is a halving roughly every 4 years. That hasn't changed. It is all the same. Now, what's also exciting, Martin, is typically when a new product comes into the world, a new financial product, It's the big boys and girls that get to front run the market. They get in on the IPOs, even pre-IPOs, if they could, initial public offerings, where they can actually invest in something pre-IPO, then it goes IPO, then it's listed, by which stage the big boys have taken all the value out of the markets. They can either rug pull it or start extracting value. Bitcoin is the opposite. Bitcoin has been growing organically. Now, you mentioned also before, you said, well, how do we transition from the old money to the new money? Well, we do it exactly how we're doing it now. We don't have a centralized body saying, this is the new money, you're going to do it this way. You have an anonymous person or group of people who made a code based on mathematics and with the purity of thermodynamics, and they released it to the world. They released it to the world with no commission. That is, they didn't get paid for it. Now, some will say, well, hang on, Satoshi Nakamoto, the founder of Bitcoin, has 1 million Bitcoin. Yeah, that 1 million Bitcoin is sitting there on a public ledger as a digital testament, a digital statue, if you will, to what we can create when all the rules and paradigms that were placed on us on the past were lifted. If 20 years ago you said we could make a decentralized money that didn't come from the top, it came from the bottom, and no one can block it, stop it, seize it, or do anything silly with it, you would have been laughed at. So the paradigm of the possibilities that Bitcoin has created for all of us, it shifted the way that we look at money. It's made many people who never knew what money was in the past realize the scam of fiat, but the importance of money. And we do make that distinction because at its essence, money, of course, is a unit of account, a store of value and a medium of exchange. But beyond that, it's a store of energy, and it's a way of us interacting with each other freely around the world, exchanging something that I have for something that you have. And if we agree, we exchange your good and service and time with my value being money, or vice versa, and we can do that anywhere. When we look at the ETFs, this is just a component of money. It's a component of a hard, sound, immutable money. But ETFs in the past, ETFs will be here forever. Financial products will be here forever. So the integration of Bitcoin into ETFs, the purists don't like it. Now we go to the other end of this spectrum. They say, well, hang on, now all the banks are in charge. Now they're running the Bitcoin SHA-256 algorithm. Now they've got the maximum supply. Now they're in control. No, not at all. If they tried to buy all the, and many people have said this to me, they said, well, hang on, Adam, what if governments came in and bought all the Bitcoin? All the banks bought all the Bitcoin. Well, they would make a lot of people unforeseeably rich, me one of them in particular. They would make me richer than you could possibly comprehend. And we go back to the chart, the distribution of money in the world. If you tried to buy all the Bitcoin in one foul swoop, it would drive the price up to $15 million a coin and beyond very quickly. And they would price themselves out of their position. So they would be selling their fiat and hard assets to buy a digital currency, which would make it even scarcer, putting the price up further, creating a bull run on a scarce asset that retail and national and institutional investors would come in, driving the price even further. In the meantime, it would send their own companies bust from their old assets being liquidated and their fiat being sold. Therefore, in fact, ironically, crashing fiat, not Bitcoin. And what will happen is in the future, is that already happening now? The first country who realizes they can print their fake funny money, in many instances it is digital, their fake digital fiat money to buy a hard Bitcoin money, if you will, they're going to in fact front run the market and realize, hang on, I can just print this fake money to buy the real hard scarce money. And as soon as that run happens, all the other nations are going to start doing it. And the consequence of that is many nations are going to start printing as fast as they can to buy as much Bitcoin as they can, therefore crashing their own currency and ironically driving Bitcoin through the roof. So we're in this very interesting phase now where we can see the big boys they're continually buying. El Salvador, as an example, a small nation who uses the United States dollar as their national currency. They've been buying a Bitcoin a day for, I think, over 2 years now. And they now are breaking away from the International Monetary Fund, where they can, in fact, become independent. Equally, other nations are starting to buy it in the background as banks are. But there's going to be a tipping point. There's going to be a tipping point where people realize fiat is done. We need a hard money. The run is going to happen on it. Fiat is going to fall even faster in purchasing power. The supply is going to go through the roof because they're going to print more of it to deal with the decline of purchasing power, which is just makes the vortex become even stronger of the inflation going up and the value going down. And before we know it, we do have this shift. So it's going to start slow, as we can see. Bitcoin's been around for 15 years. Bitcoin started at about, well, nothing, and then about 7 cents to over $100,000. You're looking at about a 14 million% return, millions upon millions of percent return on this asset in 15 years. Now, are we going to get another 14 million% over the next few years? I doubt it. But are we going to get thousands of percent over the next several years? I absolutely think so, because it's compared to something that's going down. Even if Bitcoin just held its purchasing power now, if it was consistent in its purchasing power, roughly about 5 to 9 Bitcoin will buy a house. 10 years ago, you needed thousands of Bitcoin to buy a house. Now you need 5 to 9 Bitcoins. So if it just maintained that purchasing power, the nominal price of Bitcoin will continue to go up, because what it's compared to, fiat, continues to lose its purchasing power. But it's going to get this exponential run where its scarcity goes even more scarce, because more people want it, more people are losing, and more people are trying to get their hands on it. But what it's compared to, that becomes less scarce. There's a bigger supply of fiat. So it's a seesaw effect. We will undoubtedly, absolutely, see a $1 million Bitcoin in the next 10 years. In fact, it could be within the next 3 to 5 years. And then from that point there, I'd point the viewer's attention to the S-curve. The S-curve is where we see mass adoption of any technology coming in. It could be, or significant technology. It might be the internal combustion engine. It could be a landline telephone, a radio, then a mobile telephone, televisions, multiple technologies that have come in that it's kind of flat at first, and then you have an exponential adoption curve. We're at the bottom 10% of that S-curve at the moment. Over the next, some people say that the 4-year cycle could have been softened a little bit, where we're going to see less volatility in the 4-year cycle. I would argue that's already happening. But there is very sound argument that this cycle and the next one, it becomes merged and we just have a super cycle. Now, whether this comes true or not, no one can really know. I can't really know. But mathematically, historically, realistically, the S-curve seems completely logical where this thing goes vertical. And the spot-backed ETFs are just merely a component of this.
Right. And let me just come back to the ETF, because I think it's important to understand that there are some pros and there are actually also some cons too. And here's actually a bit of a summary. We might just quickly go through this, because I think it's quite a nice little summary. This is from Forbes, actually. From the Bitcoin legitimacy is improved because of the approval of the spot ETFs, and therefore it's another asset class, and you could have them as part of individual retirement accounts and things. There's more liquidity, because with the ETFs buying and selling large blocks of Bitcoin, this could increase the liquidity and help stabilize prices. Might increase prices, although we'll look at the chart in a second on that, and potentially lower trading fees. Interesting that it makes the point here that you could actually have trading fees which are lower than those buying directly on the crypto exchanges. On the con side, more regulation. We've touched on this. The SEC, approved it, so regulation is now very much part of it. You don't, of course, take custody of the Bitcoins, and I think that's an important point. Some would say if you don't own it, you don't own it if you don't hold it. So that's quite important. HODL. Not your keys, not your Bitcoin, as some people will say. There are annual fees, of course, may cost less in the short term. The annual expense ratios maybe make it more expensive over time. And of course, you've still got the volatility question with what's happened to the value of the investment and the volatility. And of course, the volatility is driven by the price of Bitcoin itself. But I think that's quite a good little summary, Adam. What do you think? Is there anything missing there?
Yeah, I just touched on the holding it. So the purists say not your keys, not your coin, and they're absolutely right. But we have to accept that in the free market, some people don't want to have responsibility of their financial assets entirely. So we can already see over centuries that some people like to keep money under their mattress and some want to have it in a centralized body. And I say we have to support the free market. Now, again, some people say, well, if you're not really holding it, it's not yours. Well, I give a physical example. We have safety deposit boxes in banks where you can go to a building, you can rent a little box, and you can put, I don't know, your mum's jewelry and a block of gold and your birth certificate in that box. And so, well, if you don't hold that in your house, then you don't own it anymore. And that's largely true. The bank could burn down. They could have some type of internal corruption and combustion, where they take your assets and you can no longer access these. But yet this is a product that many people like. Many people like to use a centralized body to do accounting, storage, other services. And you know what? That's okay. That is the free market. At the other end, you have people saying, no, I'm going to hold this and it's all on me. With great power comes great responsibility. And then somewhere in between, and it is a large delta, a large spectrum, that you have a lot of people will say, well, you know what? I'll hold some myself, as some people hold a bit of cash and gold in their house. And then I'll centralize some of my investment with a big party like BlackRock or the equivalent, or a bank, where they can hold it, they can insure it, they can administer it, and they can look after it. And you know what? Both is okay. It genuinely is okay. Now, we talk about the fees. There are fees, of course, for these services that take place. But the architecture doesn't change. They can't print more Bitcoin. And there is an argument that they could lend out against your Bitcoin, but that in itself is okay to the extent that there's still only a set supply of Bitcoin. So what I like to do is I like to hold my own Bitcoin. But the truth is I also have some Bitcoin and other coins on hot exchanges, as in an internet exchange, and a hot wallet, I should say. A hot wallet, something like Exodus as an example, where instead of having a cold storage wallet in my house, which is, if you will, creating an air gap between the internet and the actual seed phrase that I hold in my hand, that makes the crypto mine and in more control. But I hedge my bets and I hedge my responsibility, and I split my crypto up in at least 5 places. And it's what I tell my viewers. You shouldn't put all your eggs in one basket. You should split your crypto holdings up into 5 places. So if any one place is compromised, you only lose 20%. Now, that's just my rule. Some people might want to break it up into 100 parts. That becomes a bit difficult to manage. But one of those parts could in fact be an ETF. It could be a bank. It could be an exchange. It could be a hot wallet. It could be multiple safes around your house or houses. It doesn't really matter. We have this great control. But where it gets exciting for me, Martin, is that you're going to have a lot of people with the ETFs. You're going to have a lot of people investing in Bitcoin who don't even like or know they're investing in Bitcoin. For example, everyone who's got a superannuation fund or a 401k fund or a pension fund, most of those people don't realize what their money is invested in. It could be in property, it could be in mining stocks, it could be in tobacco stocks, it could be in war stocks. Well, this ETF just enables another financial product for massive pension funds to invest in something else. Put a 1 to 2% allocation in something like a Bitcoin spot-backed ETF. But here's the thing, Martin. What many of these institutions are finding, that their small allocation to Bitcoin is performing far better than their allocation to coal stocks, mining stocks, war stocks, tobacco stocks, real estate stocks. So it's now a necessity where people are saying, well, hang on, that pension fund over there put a 3% or 1% allocation into the IBIT spot-backed ETF. And as a result, their fund outperformed our fund. So we better do the same. Well, guess what that does? Now all the funds are putting money into the Bitcoin spot-backed ETFs, therefore requiring Bitcoin to back up those funds, therefore putting a greater demand on Bitcoin, therefore making a less circulating supply, or an available supply, therefore driving the price up further. That asset then performs very well, so they put more money on it, and it continues to get this momentum of growing further and faster. And this links to the super cycle, or the S-curve that we're talking about. The adoption is getting crazy. I'll also add to this. It's not just about buying low and selling high. It's actually about utility. You can actually use this asset to build on top of it, like concrete and steel. In the early days, if I gave you a block of concrete and a block of steel and I said, look, this is the future of our civilization, you'd look at me like a fool. But if you could fast forward to look at a city where you can see skyscrapers and everything that we do with steel and concrete, you'd say, now I get it. You can use this steel and concrete as a layer one solution to build buildings, to run businesses inside it. Well, Bitcoin, in fact, is the digital steel and concrete of the future. It is so solid, robust, reliable, and predictable that we can build digital assets on top of it, a concept that many of us don't understand yet. But just when we had the internet of information, we're like, well, what's this internet thing? Is it email? Is it websites? Well, of course, fast forward, we can see the internet is all of that plus much more. It's in fact a video streaming service. It's a television station that we're doing right now. It's so many things that we'd never even considered what the internet was in the past. We just thought it was emails and adult content and criminals and terrorism. Well, guess what? That's exactly what they're talking about Bitcoin. But Bitcoin will, in fact, and is proving that it will be the layer one solution, the concrete and steel of the digital space where many people will build on top of it, not just as a financial asset, not just to buy low and sell high, not just to escape inflation, not just to park our money somewhere, but so much more. Hence, $1 million Bitcoin is, in fact, a very, very conservative estimate. The ETFs know it, the big players know it, the nations know it, investors like me know it. It's just that the mass adoption curve is yet to come around.
Yeah, and just to round out the discussion on ETFs before we go on to a couple of other topics that I want to touch on, here's a bit of a summary of some of the expense ratios, in other words, the fees, and what fees waivers were in place. This is when it started up. And, it's worth underscoring, Grayscale, of course, was up there at 1.5%. They lost a lot of money from that particular ETF because, of course, an ETF is you can buy it and sell it, and people switched over to some of the other ones where the expense ratios were lower. In other words, the fees were lower. And it is worth understanding, of course, that most ETFs, and it isn't just the Bitcoin ETFs, pretty much all ETFs are actually clipping the ticket on the way through and are basically a source of income for the bank or the financial entity that's actually selling the product. And it's very important that people understand that. I want to also underscore, of course, that it's quite liquid because in theory you can buy and sell your ETF whenever you want at whatever point in time. So there is advantage there too. So I've always believed that the ETF story is one worth exploring, but it is important to do due diligence and understand exactly what you're getting into because you don't actually hold the assets actually. And, as with all of these things, there is a risk that it could go wrong. I have to say that the flood of money that came into Bitcoin early on has slowed. And of course, the Ether ETF that came out slightly later hasn't been nowhere near as attractive and has had nowhere near as a significant impact. So I think it's worth just sort of tying that point out. But it is another way of accessing the Bitcoin story without having to worry about cold wallets and all of those things, which of course for some people are a bit daunting.
I think some people thought that the ETF was the end state, or no,
Yeah.
some people believe that was the end state. It's like, all right, once we make the ETF, that's it. And it's like, no, it was literally just another milestone. I sent you a link, and I'm not sure if you can bring it up. I sent it in our private chat here, and it actually shows the spot Bitcoin ETF flows. And it, I may have left it a bit late. Probably should have sent it to you before we went live. But basically, the spot Bitcoin ETF flows from the block.co. It shows where the money was going. Now, you mentioned Grayscale. Grayscale, by default, was almost like an ETF in the sense that they bought a lot of Bitcoin before the ETFs were approved. And you mentioned the fees. The fees are right on the money there, literally, where Grayscale had much higher fees, and they were quite willing to dump a lot of their position, primarily because they bought low years ago and they were selling high. Now, some people got angry at Grayscale doing this, and I'm like, no, it's the free market. Grayscale got in early. They bought lots of Bitcoin before it was an ETF, and then they dumped their position over several months. And they had considerable outflows. I'm looking at the chart now until they kept dumping until around the 1st of May 2024. The most amount of dumping they did was on the 18th of March 2024. Billions, 642.5 million, just under $1 billion. $1 billion Australian sold on that day. But over time, we can see that now Grayscale has flipped, BlackRock has flipped Grayscale as the biggest owner. So the whole time BlackRock, with the code of IBIT for their ETF, they have been buying virtually every single day since the ETFs were approved. Meanwhile, Grayscale has been dumping their position. And so you had this push-pull effect. Everyone said, well, hang on, Bitcoin's going to go to the moon once you have the ETF approved. Well, it was in fact flattened out because you had multiple ETFs buying Bitcoin whilst Grayscale was dumping its Bitcoin. Now, that's pretty much perfectly balanced price equilibrium, and that's why pretty much nothing happened. But the volumes, my friend, the volumes on the trading were in the billions upon billions, because on one end you had people scooping it up, on the other end you had people dumping it. But now it's flattened out. You had a lot of volatility, kind of like throwing a rock into a pool. You have a big splash and then a lot of ripples, and then it starts to calm down. Well, now we're into the calm down phase. So all of that noise has been pushed aside, and it frees us up to move forward to what's really happening, where the big banks are buying it. BlackRock is buying it. Multiple players, Fidelity, ARK Invest, Bitwise, Franklin, Invesco, VanEck, Valkyrie, WisdomTree, Hashdex. These are massive financial institutions, massive fund managers who continue to buy this stuff. They're just buying in the background. The retail investors are buying it. Nations are buying it. There's going to be a trigger where it's going to go ballistic.
Let me just put this slide up. I'm not sure whether this is the one you were looking at, but this is one I found.
That's the one.
Yeah, good. Yep. Okay. So just to reiterate what we said, you can see here the different players who are actually involved. And there was a big run early on, and now it's sort of eased out a little bit. So there's still some good transactions, but the throughput's a little bit different from where it was. And as you say, some of the big players are in there. And I think that's the point, right? So this is now, to my mind, another evolution point. It's not the end game. It's not the end of the story. But this is now another point where, in fact, the big financial system and the big financial players are once again intruding into the Bitcoin world and, of course, making money on the way through, as you perhaps would expect them to do. But it doesn't necessarily blow up the original concept of Bitcoin. All it is doing is effectively providing an overlay on the top of the underlying. That's my view of it anyway.
Yeah, another option, merely another option. We still, and this is the beauty of it. We still have the choice that we can go through an exchange, buy it ourselves. We can do it peer to peer. That is, if I work for you or you work for me, we can use Bitcoin as our medium of exchange. We can go through centralized bodies such as banks or ETF providers. And so it's just literally another legitimization of this financial product for people to access it. And as I said, equally, probably of all of this, what's most exciting for me personally is that people who don't even like Bitcoin, they're probably now investing in it. They don't even realize it, because their pensions, as I mentioned, mark my words, a small allocation will start to go to Bitcoin. It will then outperform their pensions, other allocations. More will go into it, and you'll have a massive effect. Now, look, for all of you out there who, and I know there's some out there, that's cool, who hate Bitcoin, well, don't hate something that's making you a lot of profits, because don't discriminate against profits.
Now, here's one from Tristan earlier on, which is quite an interesting one just to take the conversation forward. And he basically asked, can Bitcoin eventually be hacked by the advancement of AI?
So, yeah, it's a great question. And the question's been put through to the community many times. So the big concern was actually quantum computing. Could quantum computing put through so many guesses of what your private seed phrase was or what your private key was? And what's powerful about Bitcoin is it's not stagnant. Just as computing power grows, so does Bitcoin. So ironically, the more computing power we create, the more powerful Bitcoin becomes. So this is a new technology. And when I say new, it's 15 years old. So in the human timeline, that's so young. But Bitcoin has had everything thrown at it. Nation states, the most powerful hackers in the world, banks, and it's had multiple attacks on it, from a psychological attack that is saying to the world, hey, everyone, Bitcoin's bad, it's for terrorists and it's internet funny money, don't use it. It's had physical attacks where miners have been taken, I think in Malaysia as an example, they took all these miners and crushed them. In China, they kicked out most of the miners who weren't sponsored by the state. You've had governments in some instances when it was first early saying, no, we're not going to allow this. And all that happens is Bitcoin gets stronger. And it's a testament to the product, because it's growing organically. First of all, it's grown from the ground up, not from the top down. But secondly, as it's been grown from the ground up, the people at the top with the most amount of resources, the most amount of money, the most amount of influence, and the most amount of power, they couldn't stop it when it was 15 years old, probably because 15 years old now, but 1 year old 14 years ago. Now, admittedly, 14 years ago, no one really cared about Bitcoin because it had a very small market cap and it was just internet funny money. But as it gets bigger and bigger over the cycles, These big players, whether they're the deep state, the actual state, financial institutions, just hackers who are having a go, they have thrown everything at Bitcoin trying to break the code. Now, will artificial intelligence break it? No one knows, but all indications say no, you can't break this because it's not centralized. In the old paradigm, we think about something being hacked because it's centralized in a silo. Bitcoin is not centralized in a silo. It's everywhere. Bitcoin is essentially a ledger or an Excel spreadsheet for people who don't know what a ledger is. Just think of a list of all of these transactions. But instead of that Excel spreadsheet or the ledger being held by one body, one bank, where it can be corrupted, it can be hacked, it can be broken, it can be edited, the Bitcoin ledger is on nodes all around the world. Millions of copies of the ledger that are constantly updated in unison. If a bad player comes in, including artificial intelligence, that says, no, this is the new ledger, Adam now owns 50,000 Bitcoin, that bad player will be kicked off the network immediately. It's a very powerful concept that in our old paradigm, we believed that a centralized body had to hold the ledger, or we believed that the information had to be siloed in a central database. Bitcoin undoes all of that. What it does is it takes that ledger, that database, and spreads it across where everyone can see it, everyone can access it, but it is confirmed or substantiated through the mining network. And this is where we talk about a decentralized systems. You have nodes around the world holding the ledger, but you have miners confirming the transactions. We've never had that before. The way we do business now is we have a centralized body, a bank, using perhaps a second party such as a point of sale terminal where you tap and pay your money. And it goes through those centralized bodies who hold that centralized ledger to make the transaction go through. Martin, if you recall just recently, well, in recent time, we had a massive outage around the world. So there was a centralized body, and I thought of you immediately when this happened because it showed many people couldn't spend their money. Now, you and I have had long discussions about this, is that we need physical cash because if the internet goes down, no one can spend their money. And in that recent incident where a centralized body did go down, the internet didn't go down, the centralized body went down. It stopped planes flying, it stopped transactions, it stopped people being able to spend their money, it stopped ATMs working, it stopped point of sale terminals working. What no one spoke about then, Bitcoin didn't go down. Bitcoin did not miss a single beat. Bitcoin did not miss a single block. Not a single transaction was delayed on Bitcoin in that day. And the reason why that happened is because Bitcoin is not centralized. It's decentralized. So even if you corrupt one ledger, 50,000 ledgers, 100,000 ledgers, it doesn't matter. There's millions of other ledgers. And I'll take it a step further. Even if there's a whole country that wipes Bitcoin off the face of its map, it doesn't matter. It's on everyone else's map. And if you want to go a step further and say, well, what if there's a global power outage? Well, guess what? There's Bitcoin nodes and ledgers floating on satellites around the world. So Bitcoin is now quite literally out of this world.
Didn't know about the satellites. That's very, very interesting. Yeah. And I guess as we sort of take the conversation forward, it's also worth us underscoring that Bitcoin is still dominant, isn't it, as a proportion of the total? This is the latest picture that I've got, which shows that it's about just over 50% of the total, and then Ether, and then a whole bunch of others. Interestingly, there was a time when Bitcoin was actually even stronger in terms of the proportion of the total crypto markets. Be interested in your comments as to why it's where it is and where you think it's going to go from here.
Yeah, so we call it dominance. The Bitcoin dominance at time of recording is 55.25%. So what does that mean? That means of the trillions of dollars, we've got over $2 trillion in crypto. $1.233 trillion is allocated to Bitcoin. That is, Bitcoin is the number one coin. More than half of all the money in crypto is in Bitcoin. What we actually see during a bull run is that dominance actually drops. And so, well, hang on a second, what does that mean? So when the whole markets take off, why does the dominance of Bitcoin go down? And the answer to that is because a lot of speculators come in and say, well, hang on, I'm only going to make a 3 to 4x on Bitcoin, best case scenario. If I invest in this funny coin called Pepe or Flocky or Dog with Hat or the next best Bitcoin, or the better Ethereum, I'm going to make a 5,000x return. And the truth is, sometimes that does actually happen. So what happens is the new money that comes in during a bull run, it actually starts going, proportionally, more of it starts going to the altcoins. Because to be blunt, greedy people and chumps come in, that is newbies who don't understand this funny internet money, and they start saying, well, why would I buy a Bitcoin because it costs 100,000 Australian dollars? I don't have $100,000. And that's the first mistake. They don't realize that you don't have to buy a whole Bitcoin. You can buy 1/100 millionth of a Bitcoin. You can buy $1 worth of a Bitcoin. Just as a dollar is divisible by 100 parts called a cent, a Bitcoin is divisible by 100 million parts called a Satoshi. So when newbies come in and I say, look, and they say, I can't afford a whole Bitcoin. I said, well, just put in 10 cents. And they're like, 10 cents? How do I do that? And again, our old paradigm is, no, when I buy shares, it's a $500 minimum buy-in. And when I buy a stock, I've got to get at least a whole stock, unless I'm going into a pool. And it's like, no, that's not how digital assets work. Digital assets are digital, and digital is divisible. And because it's divisible, you can buy a very small proportion of it. Whether you want to buy $1 billion worth of it as a large proportion, or 1 cent worth of it, you can do either. But when it comes to the human psychic of coming into these spaces and saying, well, first of all, I can't afford $100,000. And even if you explain you can buy dollars worth, the human emotion of greed kicks in and they say, no, I don't want to make 3x. I want to make 500x. And it's like, well, we all do. But what they don't calculate the risk to reward ratio. When they look at the risk to reward, all they're focused on is the reward. They're like, well, I'm going to make 1,000x, or I want to make 10,000x. Now, the beautiful tragedy, as weird as that sounds, is that in some cases that will happen. You can invest in a coin and you can make 10,000 times your money. And you say, well, how is that possible? It's a scam. And it's like, no, it's not a scam. It's because when something has a market cap of $1 and then it goes to $50 billion, you're suddenly making thousands upon thousands of X on your money very quickly. Now, we showed at the beginning of this video exactly how much money there is in the world. There is a lot of money in the world, and virtually none of it is in crypto. People say, well, hang on, $2 trillion is a lot of money. No, not compared to the global supply of money around the world in all the markets. $2 trillion is virtually nothing. So there is so much opportunity to make stupid amounts of money. Now, equally, to counter my argument, and so everyone's clear, or to balance my argument, for every one coin that does a 10,000x, there's going to be 1,000 coins that go to zero very quickly. But in a bull run, because everyone's rushing to get these profits, it's almost impossible not to make money. It is so difficult not to put in money in the peak of the beginning of a crypto bull run and see your digital wallet go up many times over. But here's the thing where people go wrong. The three biggest mistakes people make in crypto is this. One, they fall in love with the coin. They say, right, I'm going to invest in this coin because I heard it's got to be a better Bitcoin and it's going to be a better Ethereum. And they fall in love with the wrong coin and they hear a narrative and they fall in love with that, and it actually leads to a scam. So essentially the first way people get scammed is they in fact go into a coin that has no real value, no real utility. They fall in love with it and they actually get scammed. The second way people lose money or don't make money in these markets is they don't take profits. They actually get into the space. They put their money into a coin. They do make hundreds of millions of dollars. It happens over and over again. People put in $1,000. Within 3 months, they're sitting on $1 million. It happens over and over again. And they get greedy and they don't press sell. And when they don't press sell, what happens is they don't take the profits, and then it goes back down. So you've got people falling in love with coins, getting scammed, and failing to take profits. Those are the three ways that they can't, they in fact lose in this space. So you just invert this. First of all, don't get scammed. If you don't want to get scammed, I'll plug my own product here. This is my name, Adam Stokes. This is my face. I live in Australia. I've created a platform called thecrypto.land, www.thecrypto.land. On that platform are all the products I use. You might like to look at them as banks, digital banks, which they're not. They're crypto platforms. They have hardware wallets. I've got information services there. It's a safe space where people coming into this world can figure out, well, where do I buy this crypto thing? Where do I not get scammed? Come to thecrypto.land. That's step one, so you don't get scammed. Number two, take profits. Make sure you take profits, which is, they're kind of all related, because you have to take profits by not falling in love with the coin. And where people fall in love with the coin, they say, no, I've already made $1 million. I'm going to hold it. I'm in love with this coin. I'm going to make $2 million. So they've managed to get past the scam. They've managed to make a lot of money, but they didn't take profits. But then they fell in love with it and they didn't take profits. Linking back to the dominance, whilst all of this is happening, the Bitcoin dominance is going down to typically around 30 to 35%. Now, I emphasize that's not Bitcoin going down. That's just the proportion of all the money in crypto drops to about 30%. In a bear market, which is arguably, we're kind of in it now, we're kind of in a sideways ranging market where not much is happening. The majority of the money is in the safe haven. There is Bitcoin and there is everything else. And everyone in crypto really understands that. You've got Bitcoin, and that is proven with the 15-year track record, and proven with the biggest market cap, and proven with the biggest price per unit, and proven with the 55% dominance. So it is objectively true that that Bitcoin is the biggest coin in many ways over and over again. But when the bull run kicks off, you're going to get cowboys coming in, including myself, because I've been in this space for many years, and I roll the dice at some of the other coins. Ultimately, when we think about the information, the Internet of Information, there's thousands, hundreds of thousands of websites, but the 5 big websites are FANG: Facebook, Amazon, Apple, Netflix, and Google. They were the dominators who came out on top as the most profitable websites in our history. The same is true with the Internet of Value. Which coins will come out on top? Well, we know Bitcoin is there, and we know Ethereum is the second biggest coin. But I would argue there is a race that's happening now. What are the next biggest coins? Are there going to be only 5 big coins? Are there going to be 10 big coins? Well, if you look at the market cap, there's really only kind of 3 big coins, and one of which is a stable coin, which is Tether, which is for a whole different discussion. So at the moment, we can see the most is Bitcoin and Ethereum. But the irony, my friend, is that people don't want to invest in those coins now because they want that 100 times X. So ultimately, to end this big rant about investing, this is not financial advice. For all the newbies who are coming in here, first of all, be safe, protect yourself, slow down, don't get greedy. Do that by coming to the crypto.land. If you don't want to use my product, cool, go out and find it yourself. But I've created this safe space for all of us because I'm trying to do the right thing by my fellow Australians and my fellow global citizens. It is crazy out here. There is an opportunity to make a lot of money. But the next thing is to, when you do your risk to reward ratio, don't just focus on the reward. People are so focused on, I want to make 1000x. That's a reward. But the risk to making 1000x is 1,000 times more riskier. Bitcoin, sure, you may only make 3, 4, 5x over the next few years, but guess what? It's 1,000 times less riskier. Not without risk. Absolutely everything comes with risk. Real estate comes with risk. All stocks come with risk. Living comes with risk. But as the timeline shows us, there is less risk in Bitcoin, therefore less return. But there's less risk. With the other coins, there is more return, but more risk. Balance that risk and you should be okay.
Interesting comment. I turned the microphone off because the dogs went off again. I had another delivery. It's all go here at...
it's good timing for my rant then.
It was good. Actually, it was very helpful. Now... It is fascinating. And look, I'm not an advocate for nor an advocate against, right? I think these conversations are really important to help people weigh up and make their own decisions, right? Because we started this conversation by saying that the fiat currencies are under significant strain and stress. Inflation is still there. Rate cuts are maybe coming. That may put a bit more of a candle under the stock markets and things. Although actually quite often when rates are cut, stock markets start to move down. So perhaps that'll fall by 20, 25% in the next few months. Who knows? But the other point here is that the global context is also to do with the dollar and the domination of the dollar. And I just want to sort of bring the conversation as we come to the end of the show back to the Brics conversation. You know, Brics is the alternative world, as it were. And some of the Brics countries are saying we don't want to be necessarily dominated by the US dollar. And of course, the dollar recently has come down. This chart, I think, shows this quite well. We've come down to around 100. This is a DXY. And now the question is it going up again and maybe to de-dollarization? Or is it going to actually continue to fall and become even more dominant? And that is, to me, one of the really interesting and critical questions that is actually underpinning the way that the financial system is going to be evolved from this point. And thanks to Macro Alchemist for the chart here. The point I wanted to make, though, was that in the context of a quest for an alternative to the dollar, the linkage back to the crypto world is quite interesting, right? Because you could argue that into the future, it may well be that something like Bitcoin takes a role that traditionally has been the dollar's role, maybe deteriorating, maybe not. Brics is trying to go down a route, but is this an alternative?
Yeah, Brics is fascinating. So the concept of looking for a new money makes perfect sense because fiat is collapsing. They keep printing it and it's been weaponized. All of these nations, Brazil, Russia, India, China, and South Africa, as well as now Saudi Arabia and about another 13 other nations. So Brics is an acronym for 5 nations, but more and more people are signing up for it. And the reason why they're signing up for it is perfectly logical. They're saying, well, hang on, why do you, America, and it's nothing against America, I've got the flag flying in the background here. It doesn't matter which nation. Why does that nation get to print fake money to buy our real stuff? Why do we have to plough the fields and build all this stuff when you just get to print the money and buy all of our hard assets? That's a pretty bad deal. And by the way, if we buy your debt or sell debt and work in these debt markets, you just inflate away that debt to benefit yourself. So we keep losing. And if that's not bad enough, well then anytime we do something to offend you or you don't like us, you can cut us out of the financial system and block and seize our accounts. So these nations are forced to do what they're doing. They have to look for an alternative. They cannot be part of this Ponzi scheme any further. They keep working for real assets to get a fake money. The money that they earn from America, if they hold those assets in debt or bonds or treasuries, they're diluted because they keep printing more and more of it. And at any time, if they misbehave in the eyes of America, then they're cut out of the financial system. So it is completely natural that nations around the world have to look for an alternative. So now we go into Brics. Brics says, well, okay, what we're going to do is we're going to do which every other gold currency in the backed currency in the past has failed. We're going to do it this time. So we're going to make a currency and we're going to back it by gold. Now, it's never worked in the past because what happens is you put the gold in a vault, you write a note against the vault, suddenly someone gets to hold the gold in the vault, so they've got your gold. They've written a physical or digital note against the gold in their vault that you've just forgiven or given up, forgone. And now, in fact, a double spend will occur. What's a double spend? Well, they realize that no one's taking the gold out of the vault. So they're just going to print more and more notes against the same gold in the vault. And then eventually, as we saw with President Nixon in 1971, they're just going to say, well, we're just going to suspend it. We're going to temporarily de-link gold from money, from fiat, from the US dollar, because we have to protect America and we have to protect ourselves from the speculators. Well, no, what really happened is America ran out of gold to print money. There was a Vietnam War going on. They needed more money. They couldn't get any more money. So they just said, okay, well, we're delinking it. Now, that was in 1971. It's now 2024. And even though they said that we're temporarily delinking it, it never went back. So they just kept printing this money. Now you look at Brics, you say, well, okay. Well, if a gold-backed currency has never worked in the past because you have to centralize it and you will write a note against it and then you'll double spend it and then they'll delink it. If it never worked with one nation, what in the hell thinks it's going to work with 5 nations? How on earth, correction, it expands to 30 nations. Who's going to hold the gold? Who gets to write the note? Does Russia trust China? Does India trust China? Does Brazil come into this? Where? Or South Africa and all of these other nations? So ultimately, Brics will not work. The concept sounds good, and it's nothing against Brics. It's against a gold-backed currency. It won't work. Even though the theory says, well, it should work, and it will work because gold is scarce. I can prove it will not work because it has never, ever, ever worked in the past. And even when the gold was centralized in one country, it never worked. So how on earth is it going to work when it's centralized in 30 nations? How do we account for that gold? Do we go into the vaults and I get to go into the Brazilian vault and count their gold? And they get to go into the Russian gold vault? And then the Chinese gold vault, and how many vaults are there? And then what do? Do you go in there with a physical block, 1 block, 2 blocks, 3 blocks, 4 blocks, and by the time you get to the end, the next guy wants to come in and check it? And even if you could count that, how do you check for the purity? We saw the Perth Mint, of all nations doing this. They corrupted the gold that they were selling to China. Absurd, absolutely absurd. So we can't trust who's holding the gold. We can't verify the gold, and we can't be sure that no one's going to double spend against the gold or confiscate the gold. It's not saying that gold doesn't have a value. I make this very clear to the viewers. Gold has value, of course. Absolutely it has value. Baseball cards have value. Bricks have value. Many things have different value to different people, and gold is scarce. It's hard to get. It has a value. There's no question. But we're talking about a global reserve currency, or even a national reserve currency. I don't trust you, you don't trust me, we don't trust them, and they don't trust us. Not because they're bad people or we're bad people, because it's human nature. We can't be trusted. So what we need is a trustless money. And for the first time in our history, we have a trustless money. That trustless money is called Bitcoin. Everyone can see it on the ledger. No one controls the ledger. No one can print more of it. It's decentralized where everyone can be part of it. It is neutral where it doesn't discriminate against anyone. It is open where everyone can use it. It's borderless where it doesn't see a transaction between you and me next to each other, or you and me on the other side of the world. Open, borderless, censorship resistant is the next part. Censorship resistant is very important for a hard money, because nations need a censorship resistant money, because if they don't have a censorship resistant money, they're going to be called enemies of the state, have their accounts blocked, cut out of the SWIFT network, and be called oligarchs and have their accounts drained. So you need a censorship-resistant money. Bitcoin has all of these properties: hard, borderless, open, immutable, censorship resistance. The immutability part is you can't double spend it. All of these facets of money that we need, whether you like the name or not, you need all of those aspects of money for it to work. And I put this out to all the Bitcoin haters per se, or those who haven't come around yet. I've been saying the same message for years, Martin, and I'll say it again, and you know where I'm going with this. If you can show me a better Bitcoin, a better money, a better gold-backed currency, I'm all in. I'm not about a Bitcoin maxi. I have other coins. I've invested in other stuff. I've got gold. I've got property. I've got many things. But Bitcoin isn't about buy low or sell high. It's actually about world peace. It's about breaking down borders. It's about energy consumption, which is a whole video in itself, in an efficient way and an environmentally friendly way. It's about having a fair, sound money that stops the money of war. Fiat is a money of war. Bitcoin is a money of peace. Most people who got into Bitcoin, they came here for the Lambo and then realized, hang on, it's much more than that. We come for the Lambo, we stay for the evolution. And the evolution, some say a revolution, but it's really an evolution of how we interact with each other. A fair, open money that all of us can be part of, but no one can control. We've never had this architecture before because we've never had the technology before. Now we have the technology and we have the history that we can't be trusted. They don't trust us, we don't trust them, you don't trust me, I don't trust you. Let's go for a trustless money. And that, my friend, is Bitcoin, not Brics, not gold, and certainly not the dollar.
So the last question for tonight is just a little bit on the price action of Bitcoin over recent times. We had the halving, and I know that there were a number of people who argued that directly after the halving you would expect to see the price rise. At the same time, we had gold moving up quite strongly. In fact, gold is pretty much at an all-time record now. But Bitcoin has more recently sort of wandered sideways. And in fact, this chart here, this is the US Bitcoin, wandering around the 62, which is back where it was back in 2022. It's gone down, it's gone up a bit, gone back down again. What's your perspective? Has it got disconnected from gold? And has the post-halving movements been surprising to you? Are there one-off factors like Mt. Gox, or is this a sign of more stabilization in the price of Bitcoin? What do you think?
Yeah, so many good points there. So first of all, we can see that over time, Bitcoin does become less volatile. When it was very volatile, people were upset with it. When it became less volatile, people were upset with it because it was quite boring. But ultimately, we did hit an all-time high. But this time, typically the all-time high happens after the halving. This time is the first time in Bitcoin's history it happened before the halving. What you can actually see on that chart, Martin, is in fact, if you just want to bring it up as technicals, what you in fact have is compression. Now, I'm more focused on fundamentals because fundamentals have a far greater impact, in fact, a primary impact on price than technicals. However, there are a lot of technical gurus out there. So from a technical perspective, what you in fact have is a compression wedge happening on the right side of that chart. You have compression and there will be a breakout. Now, where will that breakout go? All indicators from fundamentals and technicals say it's going to break up. You are still going to have a bit of a play of, as you said, it likes this range. There is a long range there where it's bouncing between primarily 60 grand and 70 grand. You can see it there. It's just bouncing around that 70 grand range. And that in itself is a historical event. There are so many historical events just this year. You've got spot-backed ETFs. You've got presidential campaigns talking about it. You've got so many nations adopting it into their reserves. You've got retail and institutional investors coming into it. You've got an all-time high hit before the halving. You have more hash power than ever before. There are so many first times, noting that the history of this is only 15 years old. So in my observation, in my calculations, you will see a new all-time high of a minimum of $147,500 US dollars in the next 6 to 12 months, comfortably. However, that could blow out exponentially to $400,000 to $500,000 US dollars. That in itself can create psychological momentum in the markets where people are like, well, hang on, I better get in on this thing. So this is where we talk about the super cycle moving into an S-curve. Will it happen this cycle? I don't know. Will it eventually happen? I'm almost certain it will, because for all the reasons that we've explained about the adoption of this technology, not just about a speculative asset. Going back to gold, what's interesting about gold is, yes, it's hit an all-time high, but again, its purchasing power has remained relatively constant. A fun fact about gold is that an ounce of gold throughout almost its history has been able to buy the equivalent of a men's suit and a pair of shoes. So in the olden days, well before yours and my time, you could buy a toga and a pair of sandals for an ounce of gold. Now you can pretty much buy, of course there's some variations, which country, which time, but it's pretty much a men's suit and a men's pair of shoes, a men's tailored suit and a men's pair of shoes. So if you actually look at the history of gold, where gold is performing very well is gold is doing what it's supposed to do. Gold protects you from inflation. Gold protects your purchasing power and maintains consistent purchasing power. So when we actually consider that gold has hit a new price all-time high, when you actually account for inflation and you actually account for purchasing power, gold was actually lagging. It should have hit that all-time high a little bit sooner, but it just took a while for the market to realize, oh, hang on a second, this fiat stuff isn't worth much anymore. We better put the price of gold up, because they've just printed so much of this money. So I make the distinction for all the viewers out there. Make sure you're very clear on the difference between a nominal price and a real value. A nominal price is what Bitcoin or gold, we're talking gold at the moment. What is the price of gold on the shelf at the moment? But when you go to the real value of what is the purchasing power of gold, it's pretty consistent.
Very interesting, and thank you very much for your thoughts on this whole area. I want to underscore again, we're not advocating nor are we denying the possibility or potential, but this is a really interesting and important conversation. What I think we've concluded is that the existing financial system that we have is not fit for purpose. That essentially it's a mortgage on the future, particularly for our kids, which is a bit of a problem, to put it mildly. And in the meantime, of course, asset values continue to inflate. Bitcoin has some characteristics which are quite distinctive and different. And there is a big debate about, well, is it this one or that one? And Jason made the point that some have the ISO 20022 and some don't, and all of that sort of stuff. I mean, that's a technical conversation, which we haven't touched on tonight. We have covered it in previous shows, so check those shows if you want to go there. And Jason, thanks for the super chat, always greatly appreciated. But for me, this is part of the ongoing exploration of an alternative future with an alternative form of money. And as we talked about, this evolution from one world, which is frankly a bit broken, to another world. And I guess we'll see how it evolves. Adam, always greatly appreciating your comments and your thoughts. Any last closing comments?
Just again, I commend you for your efforts in remaining open and exploring other opportunities. For anyone who'd like to join me on my channel, everyone's welcome there. I go live every Wednesday and Sunday, as well as having other videos released. It's on YouTube, Adam Stokes. Buy my book, 28 Pro Trader Tips, The Art of Trading. Do everything safely on the crypto land, www.thecrypto.land, or follow me on X, Adam_Stokesy.
Yeah, terrific. And we'll just show you this. Whoops, wrong one. That's that one. There you go. That's the Adam Stokes YouTube channel. So check it out. And there's a lot of very interesting stuff there. I quite often watch some of your other conversation points. Always really interesting. And you get into a lot more technical detail than we did tonight. But that wasn't the purpose of this conversation. This purpose was a slightly more of a broad conversation. Well, thank you once again. Really appreciate all your thoughts on all the time that you've spent on tonight. And thanks for all those in the chat, all the comments and conversations. Clearly, we're not going to find that everyone's going to agree. And, there's diversity in the chat as you'd expect, but that's okay. We expected it. Adam, thank you very much. I'm going to take you off stream and I'm going to just close the show. See you next time.
Martin.
Cheers.
Ciao.
Hope you enjoyed that. And as always, some really important conversation points there. And I hope you found it interesting. Just to say that next week, Damien Klassen will be on. We'll be talking about the financial markets and what's going on. This Friday, I'll be having a recorded interview with Senator Gerard Rinick, who announced that he was leaving his party and forming a new one. So it'll be interesting to see what Gerard is going to be thinking about, and that'll be an interesting political conversation. So that'll be on the channel quite soon. And I also hope to have a conversation with Tarek as well at the end of the week. So there's always plenty of material on the channel here. We cover everything in finance and property and, many different dimensions. Just to say that we have a couple of dogs left. Meteor's popped out, but the other two are there. So I hope that's not going to create too much issue. With noise, we had a couple of issues off, but anyway, we got there. Anyway, thank you very much for spending some time with us this evening. Thanks for the super chats. Thanks for all the comments and conversation points. And I'll look forward to seeing you on the next live show next Tuesday, or indeed you can check out my recorded shows that come out each day. This is Martin North from Digital Finance Analytics signing off. We'll see you next time. Take care.